Hey, everybody. Thank you all for being here. Happy Saturday. I must admit, I've been excited all week. Sorry about that. Checking the volume. I must admit, I've been excited all week because we have a community member by the name of Zim, and it's his mom's birthday today. She is 96. So hang on till the end of the show. I got two surprises for Mary. And again, it's all about being very creative and doing things differently. But there's also a ton of very good news to cover as well. So thank you all for being here. Happy Saturday. See you out there, Andy, T&D, the whole team are here. So this is awesome, and I just love doing this. And of course, not financial advice, edutainment. And, well, the story, we're going to touch on a whole bunch of stuff. We're going to look at a lot of Bitcoin blockchain, what's happening with whales, what's happening with addresses. We'll talk about shell games that are played with utility tokens. Look at a bit of DAU activity. We look at a massive bearish bet on Ethereum. Very interesting option action. And talk about Blackrock. Rumors are flying around, some weird FUD. It's a little bit incorrect. I'll correct that for you as well. It's still good news. And a whole bunch more. We'll also talk about how the Fed is succeeding in their mission, which is kind of a great article from Zero Hedge today after my video yesterday, and so much more. So first of all, let's talk about Solana, because Mary likes Solana and Solana Beach. We'll get back to that afterwards. But Solana daily active users are up 50% in January 2023. And much of this hype is because of Bonk. Bonk Inu, it's a type of meme coin. And of course, we don't promote meme coins here at all. But it did gain a huge audience, went viral on social networks. And, you know, it is basically a Dogecoin-like thing, but on Solana. And so far, the token holders have now reached more than 100,000 addresses. And this is only in 3 or 4 days. So it's madness what's going on. But this is evidenced by similar spikes as well on other chains when these types of meme coins launch. And it's all part of this, you know, are NFTs real? Are meme coins real? Etc. We'll talk more about what McKinsey have to think about that too. So that was the Solana news. And let's jump into Bitcoin here very quickly. These are the bear drawdowns from Realized Cap. Big thank you to Sanjay for sharing with me. But the store of value of the coin is calculated by summing up each coin at the price when it was last moved. And since crypto can be lost, unclaimed, unreachable, like Satoshi's stash of 1.04 million Bitcoins, various bugs, people forgetting their seeds, etc., Realized Cap is introduced to discount those coins which have remained unmoved for a very long period. Now, the 2022-2023 bear market, here we are still in a bear market. The Realized Cap drawdown is 18.8%, and this is the second largest in history, eclipsed only by the Pico bottom of the 2011 bear. And investors have weathered a lot of this. In fact, investors out there have taken $88 billion in net realized losses. Now let's look at one of our new indicators. This is the Tabby. We look at the Bitcoin supply and profit. And interestingly enough, when I pull this up today to kind of cross-reference the drawdown numbers, I thought it'd be interesting to look at. But the amount of supply and profit is at 47%. That means only 47 of those people that hold Bitcoin are actually in the green. And 53% means are in the red. And this is what's interesting about this. Last time we were this low, in fact, we're not as low as we were 3.96 years ago, but we are about 1.7% higher. The actual low was just about 45%. So we're very close, but not quite there yet. And the question is, what happens next? Now, to put things in perspective, over all the cycles, this is a beautiful chart put together by our friends at Stock Money Lizards, sorry. But what's interesting about this is they took this little chart, and it's a very nice representation of what triggered big drawdowns. Sometimes it's seasonal, but sometimes it's also triggered in part by black swans. So back in 2011, there was the Mt. Gox Black Swan, and it brought a 96% drawdown. Then Bitfinex in, what year is that? Bitfinex 2015, 2014, time zone approximately. 86% drawdown. Then we had 84% drawdown. No black swan per se. It was just a nasty bear market. Then we had the COVID-19 dip. And here we are, 2022, late 2022, we had the FTX Black Swan. A lot of people say it's not a Black Swan, it was expected, but it's a Black Swan. Anyway, the drawdown there is 77%. But if history repeats, you can see diminishing returns both on the upside and diminishing drawdowns perhaps on the downside. So 96, 86, 84, 77. Maybe this is it. A lot of people are still calling for that $9,000 Bitcoin, but we'll see. Anyway, so far, a little bit of good news, a little bit of more good news, some bad news coming, though, watch out. The Bitcoin so far, year to date, is up 1.98%. And again, it's been kind of trying to rally towards a 17,000 number, but every time it gets close, it sells off. And part of the strength over the last couple of days may be due to the unemployment rate of 3.5% in December, from the 3.7% witnessed in November 2022. One of the rare times where bad news is good news and good news is bad news in the market. Very strange, but we all know those labor numbers are a little bit suspicious in how they're structured. Anyway, we won't go into that for this particular video. Let's talk about Bitcoin futures. These ones have dropped off a cliff. You can see all of the activity across all the major exchanges: Binance, Bybit, OKX, CME, Huobi, and 6 others. Again, nobody is active in Bitcoin futures anymore. And perhaps this is because there is far less trust in centralized exchanges now where many of these things are traded. And that is hurting those sexes as we go forward. Volumes are down about 39% month on month as they clocked in the worst month since October 2020, when volumes are about 333 billion, or exactly 1/3 of $1 trillion of volume, down to fractions of that. Now let's talk, since we're talking about options and futures and derivatives and that type of stuff, let's look at this transaction. Somebody out there bought 26,000 contracts of $400 Ethereum put options. That is a big, big position. And that type of large order must mean either one of two things. Somebody expects maybe Ethereum to go to this level of $400 in summer and by June 2023, or it could just be whales protecting their position, or whales trying to wag the market, trying to manipulate the market. And this is per Blowfin official, but we don't know. But that was kind of alarming. That type of size of a position. I mean, somebody is extremely bearish out there. And also remember, we have that March period of time coming where things will be unlocked, and there could be a lot of sell pressure. Maybe they're getting in position for that as we go forward, and that's about 2.5 months from now. Now, the big news that a lot of people is kind of buzzing about is a lot of people saying, oh, $15 trillion fund is buying Blackrock. No, it is not $15 trillion. It is a $15 billion fund. This is a sub-fund within the many Blackrock funds that they have. And this specific fund, you know, nurses, teachers, as well as other investors are in this fund. It is, I can't remember the name of the actual fund itself. Their global allocation fund. It's written right there in front of me. Oh my God, I was trying to remember. So their GAF, global allocation fund, let's call it. They filed a 15T filing, or whatever it is. I'm not sure what the filing number is called, but they said they may invest in cash settled Bitcoin futures that are traded on commodity exchanges registered with the CFTC. Now, the bad news about this, maybe BlackRock are buying this as kind of a short-term trade. They're not buying Bitcoin per se. They're buying a derivative of Bitcoin. So that doesn't actually affect, you can't, because I was searching all around when I heard about this. I was looking for big whale transactions, couldn't find any. In fact, I saw a little bit of whale sell-off over the last 2 weeks and not actually acquisitions. So if they are just playing like Beto or something else, it'll have no real impact on the Bitcoin price itself. But it is one of the first times a fund has added Bitcoin to their package, and it could be a step in the right direction for other funds. Also, it's a conservative portfolio, and for them to dabble in this is kind of interesting. And remember, in perspective, global assets, Bitcoin is piddly at 370 billion. It is 0.05% of all global assets, compared to real estate, 41.7% of $260 trillion of global assets. You see gold there around 11 trillion. We will, many believe, get to gold's market cap. We just don't know when. Is it going to be in 5 years? Is it going to be in 10 years? I don't know. We'll see. But remember, gold is continually found on the earth, so it's not as hard as Bitcoin. And it's funny to see the hardest asset of all on the far left side of this chart as we go forward. So let's keep an eye on that. Let's talk about this one. Since we're talking about Bitcoin on exchanges and lack of confidence in centralized exchanges, this is the amount of Bitcoin collateral on exchanges as of right now in a visual, and you can see the drainage has been quite extreme. In quick summary, since April 1st, 2022, just before the deleveraging dominoes, the cascading liquidations, whatever you want to call it, the carnage that befell us, the y-axis is the percentage difference and line weight is proportional to the Bitcoin held presently. So from this quick little chart, you can see there are two winners. That is OKX and Bitfinex. And those that are flat, neutral, well, plus 4%. Binance is neutral. And everybody else is a loser. KuCoin, Bybit, Crypto.com, Deribit, Bitstamp, FTX, of course, Kraken, Gemini, Coinbase. They've all been drained. Maybe, if this is an indicator of the level of trust people have with centralized exchanges, that bodes well for our friends OKX and Bitfinex. And it means, with all the FUD flying around regarding Binance, nobody's concerned, at least that much. So let's talk about some bad news in the cryptoverse. If anybody uses Balancer, they warned of a potential exploit and asked their customers to withdraw. And Balancer said that the pools need to be withdrawn or dollar, which is a USD on Ethereum, I think. My Life, Smells Like Spartan Spirit on Optimism, Tenacious Dollar on Phantom, and a few others. So if any of those ring a bell with where you're playing, get off of them now. Be careful out there. Next, let's talk about some of the funny games that are still happening in crypto. Justin Sun moves $100 million to Huobi. A lot of smoke this week about Huobi going under, not being liquid. Well, he pulled money to pop it in. So a little more detail, pulling money from Binance in stablecoin form, deposit into Huobi, and then they played around a little bit more. Here, when you follow the money, it's kind of very interesting to see what happened. So on the left-hand side, you've got all the big kind of wallets and positions. You got Binance and Huobi and Binance and a bunch of others. 1inch is there, Aave is there. And you can see all the Justin Sun boxes in the red in the middle, all his kind of positions, and then how money flows from those wallets to other sub-Justin Sun wallets, into other different accounts, and ultimately to Huobi down the line, and converted into other types of stable coins as well. So it's just, we talk about a house of cards. Right here, you see some of the games that are being played at a very high level with lots and lots of money. But just again, be careful. Do not trust centralized exchanges. They're all very frail. This chart as well, which Sanjay sent me as well, I call this the utility token shell game. We all know about all the different tokens that are kind of platform tokens, exchange tokens, etc. They're all BS. Don't ever buy one. Don't ever hold one. In my opinion, they're just too risky. But here, if you look at the token allocation for Huobi right now on how they prove their reserves, they're now 36.1% their HT, which could go to zero in a very small window of time. Not saying it will, but it could. But when you look at the hard assets they have, you've got your Bitcoin and your USDT. That doesn't even make up 40% of their reserves. Then you got your HBTC, whatever that is, obviously a wrapped Bitcoin, a little bit of ETH. But again, just be careful out there. That what they're doing is they create a utility token, print it to infinity, hoard huge concentrations like 70 to 90% of it, convert it to cash, move it around, turn it into more utility tokens to keep stuff afloat. It's like the game I used to watch in New York where they hide the ball under the little cups. I know there's a name for it, but I can't remember. Anyway, let's talk about other related news. USDD Depegs. This is, USDD is tied to Justin Sun. It's related to the Huobi crypto exchange. It's also somehow tied to Tron. That price of Tron also fell 8% as well. And again, I think Justin Sun did say that they will be laying off hundreds of staff in the coming weeks for Huobi. And be careful of holding things that are not solid assets, especially these types of stablecoins that are out there. Only hold pristine stuff or pure form if you can. Now, a little bit of interesting news from McKinsey. And McKinsey are super, super conservative. And they just came out with a report. And they spoke about by 2030, the metaverse could generate 4 to 5 trillion across consumer and enterprise use cases. This was something to look at. We've been through a brutal time, and a conservative firm like McKinsey starts pumping the metaverse. It's incredible. And they believe the metaverse, NFTs, are extremely well positioned for long-term disruption. And they talk, if you look here, the chart, you'll see a myriad of customer and business-centric use cases. Could cater to, for example, pulling out the dark blue ones where they have the most use case potential: e-commerce, banking, discrete manufacturing, professional services, telco, media, process manufacturing. This is all very, very stunning. Also, they believe the more we have things like technology enablers, like devices, AR, VR, sensors, haptics, peripherals, this will drive a huge amount of traffic into the metaverse and a lot of commerce as well. And interoperability and open standards will also facilitate that, and a whole bunch of development tools. So those that think, metaverse, fake, money grab, etc., you got a firm like McKinsey behind it, that is saying something very, very big. So let's switch gears. A little bit of macro here. This is just an impressive article from Tyler Durden, and it's also authored by Michael Snyder via the Economic Collapse blog. And they said 11 signs that economic tipping point that everybody's been waiting for has arrived. This was published just this morning, and it's funny because people on TV and all the so-called experts are debating whether or not we're going to have a recession. Meanwhile, everything is imploding all around us. I did a video yesterday on this, proving not only inflation is dead, but also a lot of stuff is dying, with my little ship analogy full of cannon holes and it keeps getting shot even though there's just a little bit left above water. But I summarized Tyler's tipping point list, which is very similar to what I covered in yesterday's video. And I'm just going to run through them real quick, starting at the top right corner. US manufacturing is declining at the fastest pace that we have seen. U.S. services, which was holding strong for a while, has now fallen for 6 months straight. Third, we just witnessed the largest one-day drop in the Baltic Dry Index since 1984. This is a measure of how stuff is being shipped around the world. Number 4, thanks to 1984, by the way. Remember that year? Yes, very important. So number 4, thanks to rapidly falling imports, we just witnessed the largest monthly decline in trade deficit since the global financial crisis. Ring a bell? It's like a GFC 2.0 happening all over again. In 2022, US auto sales were the lowest that we have seen for a full year in more than a decade. Okay, people are talking about, Tesla beating production but missing deliveries. Well, if you look at all the other car company makers, they are hurting way, way worse. The average 30-year fixed rate mortgage is more than twice as high as it was this time last year, which just smashed the real estate market to a large extent. On the left-hand side now, the tech industry has laid off more than 150,000 workers over the last year. They typically lay off first. Amazon upped their 10K plan to 18,000 people this week. Bed Bath & Beyond is warning that the company is literally on the verge of declaring bankruptcy. And by the way, it's not the only retailer out there. I have a list of another 4 or 5 that are ready to hit the wall. And once these guys do, again, it's all a house of cards. And you can see the big black holes that are winning the retail game, and all these little peripheral companies are just suffering. Number 10, I think, existing home sales in the United States fallen for 10 straight months in a row. See the pattern, anybody? And according to CNN, sales of apartments in Manhattan were 28.5% lower in the fourth quarter of 2022 than they were in 2021. It's actually far worse in many other markets, but that was on his list. So here we are, economy smashed. Now back to a cool little chart. I've been talking about this, that it's very rare you get 2 consecutive bad stock market years in a row. But here, this is from Bloomberg. They call it double pain. So economic data bolstered the case for optimism, believe it or not, with that jobs report, which when you dig into it is very misleading. But anyway, we're not going to talk about that. Euro area inflation is returning to single digits and falling fast, fueling hopes that the bloc's worst ever spike in consumer prices has peaked. And for 2023, the average year-end target for the S&P 500 among top strategists surveyed by Bloomberg in December was about 4,078 points, which would be like a 7% gain from where we are now, approximately. And though that largely reflects the big slump that took place in the end of the year, it means it could be, and most probably historically speaking, will be a good year. But just a bit of history for you all. Only 4 times in the history of the world have we had back-to-back negative years. Great Depression in the 1930s, World War II in the early 1940s, 70s stagflation in the mid-70s, and then the global financial crisis. They were heavy-duty bad news years. So odds are, could be good. Now, switching gears, let's talk about Apple for a second. This was startling that the number of apps in the Apple App Store is at a 7-year low. Now, I'm not sure of the exact reason for this, but here you can see they have about 1.6 million apps. The Google Play Store has about 3.6 million, nearly 2 million more applications. And Amazon, I didn't even know they had an app store, but they got about 480,000 apps on theirs. But it could be a focus on Apple killing old products. It could be apps not embracing Apple standards. It could be user experience. We'll see. But it could be the hoopla as well regarding Twitter and the 30% fees. I don't know what happened, but that is a very telltale sign. And the App Store for Apple has been a massive money generator for a long time. They take 30% of everything. So maybe less product on the shelves could mean less revenue for Apple. I'm not sure. And Apple had a very tough week last week as well. So on to my favorite part of the show. I want to wish a happy birthday, Mary. Vintage 1927. Again, Zim, our community member, this is mom. She watches every day, and he asked if I could just wish her a happy birthday. So happy birthday. And he said, I hope your son bought you some Solana. But that gave me some inspiration, not only for this, but also to put together a little piece of art for you. And this, I also wrote a poem, but it's too long to read. But the poem can come later, and I'll drop it in the comments below if anybody wants to see it. But Mary, this is you as Dolly on Solana Beach. Happy birthday, Mary. And by the way, I can turn this into a canvas for you and mail it to you. That's up to you and Zim. So have a great day. And thank you also for being community members. So with that, thanks everybody in the chat. Thank you to moderators. Hope you had fun and learned something new. I'll see you all tomorrow. We're going to move our Q&A back to Sundays. So I'll be here for that as well. Thanks all.